What's going on, everybody? That countdown music still gets me hype every time. I swear it does. But what's going on? Welcome to the chaos. My name is Brad. The stock market is crazy and chaotic, and I made my mission to hell. But you guys own it. Sometimes you do help me own it though too, and that's what's great about our community. But listen, yeah, I saw that Snookeroo said, "What a power hour!" It is gotten ugly towards the end of the day here. Another red day. The S&P is down 43 points. Dow's down 290, almost 3 points. NASDAQ is down 148. Russell 2000 is down 23 points. The real big loser here seems to be the Russell. It's down 1.37%. Everything else is down either at or below 1%. So we'll see. We'll see what happens next week. I put in the poll. Feel free to chime in. Most of you say that we're fucked. I kind of expected that, but I baited you there. I baited you there so that I could talk about how I don't feel that way. I do think that it could be a little bit choppy going into November, and we'll talk about that later in the show. But listen, guys, first week, me getting back into the swing of things on a really consistent basis. I mean, obviously, I've kind of been here and there throughout the summer, but really pumped to kind of get started this week. And as I had said on Monday, that I thought this was like a really good opportunity to just kind of get back in the swing of things. You guys know that I'm your boy when it comes to earnings. This is the channel to be at. So if you're new to the channel, first of all, subscribe, hit that thumbs up, of course, but would love to get more into just talking about earnings as we did back when things were good. When I was here on a regular basis. I mean, it just feels good to be back. Snooker says, I thought my Morgan Stanley was a deal at 73.75. Well, now you get an opportunity to get more, right? Isn't that what they always say? Hey, if it goes down, just average down even more. I mean, because you have an endless pool of money, right? Let's so I want to open it up for some Q&A. I thought this was a good opportunity. Today, there isn't a whole lot of exciting earnings going on. So I thought, hey, you know what? We haven't done this in a while. First of all, we haven't done me being live with you guys in a while, as far as, before this week happened. But shoot some stocks out there. Remember when we used to do like shit or legit? Is this stock shit or legit? I feel like I should bring that back. I feel like you guys like that one. But we'll come up with some other fun stuff. But I really just kind of wanted your questions. Throw them out there, your concerns, whatever you got, put it in the chat. And I wanted to kind of cover a little bit of our reaction from yesterday. So if you didn't catch yesterday's stream, we reacted to Tesla's earnings as well as Netflix. And I wanted to start with the good. So let's do that, shall we? Let's start with the good. The good is Netflix. Netflix is on fire. As you can see, this is the 15-minute chart. Let's go to the 5. Yeah, 15 is good. As you can see, it's up 16.6%. And I would make the argument that the earnings, while they were okay, the real big thing here is that subscriber count. And that's what's really kind of moved the stock up a lot. I think that there's room for this to run. I did talk about this yesterday, if you guys recall, or if you weren't here, I'll give you a little friendly reminder. If there was two stocks that I was going to be choosing between, if I only had enough money to trade one of these yesterday, it would have been Netflix. And there was a few things that I was going to point to. One of them being, that Netflix had been at an attractive valuation. Trading at the time 28 times next year's earnings. It's still 29, which, if we're still comparing it to the other fangs in big tech, it's kind of cheap from a forward PE standpoint. Year to date, though, it's up 36%. That's including today's performance. So far outperforming the S&P 500. I think that there is still quite a bit of room for this to run. If you guys didn't catch what happened on their earnings, they came in at 373, beat earnings by 23 cents. Revenue came in at $8.54 billion, which is about in line with what expectations were, but it did grow 7.7% year over year. Global streaming paid memberships, 8.76 million to 247.15. Q4 guidance revenue of 8.69 billion versus 8.54, which is pretty damn good. Earnings per share guidance was at 215 versus the 220, so a little bit low on that. Revenue came in Q3 2023, grew 8% year over year on a reported and a foreign exchange neutral basis, which, hey, listen, this was a headwind for a lot of tech stocks over the last 18 months with inflation and the dollar getting stronger and stuff. It's been a real struggle for tech stocks in particular. It's really been a struggle for any sort of U.S. trade, but tech in particular, this has impacted a lot. We've heard from Microsoft, from Meta, from Salesforce even talking about this. And so that's a positive. This was slightly above their forecast. Revenue grew in Q3, reflected a 9% year-over-year increase in average paid memberships, 8.8 million paid net additions versus a 2.4 in Q3 2022. That is a major jump compared to last year due to the rollout of paid sharing, strong, steady programming, and the ongoing expansion of streaming globally. Remember, everybody said that, I don't want to say everybody, I want to speak for everybody. Don't want to generalize here, but remember when they talked about how Netflix doing this was going to kill the stock, it was going to kill the company, and sure enough, it's actually being quite the opposite. It's looking pretty good. So I don't know who this is who's telling me I'm hot, but very much appreciated. It's the hair, right? Feel like that's probably it. Tammy, good to see you in here. I am back. Snookeroo, too funny. Car companies on strike and the car parts stocks are way off. Perhaps buying O'Reilly, AutoZone, Advanced Auto Parts. We'll take a look at that in a little bit. Let me cover Tesla here because I know that a lot of folks were kind of like WTF on Tesla. Stock's down 9.5%. Let's break this out to the daily charts. By the way, as you're looking at these, this is Don's zones here. Don from the Don Fran Show. And we were talking about this yesterday. Remember we were talking about this wedge here? And that it seems as if Tesla was kind of on the up and up when we were talking about this trend. It looks great. This rising wedge looks fantastic. And it was kind of chilling in this zone, but then it dropped out of this. And now it's just all the way down here. Here's what happened with Tesla. They missed earnings pretty badly, and to the point to where now the valuation comes into question. Does it make sense for it to be trading at, as of yesterday, 75 times next year's earnings? Here's what happened. They came at non-GAAP earnings per share, 66 cents. They missed that by 7 cents. Revenue of 23.35 million, missed by 790. The CapEx was 2.46 versus 2.06. And yeah, it just kind of kept getting worse from there. Production wasn't great. They missed on a lot of things. And then Elon comes in and starts talking about working from home. A lot of irrelevant stuff in that conference call. Kind of didn't make a whole lot of sense, in my opinion. Give me your takes on that, because Elon took a break from conference calls for a reason, and now it seems as if anytime he comes back into that, he kind of just tanks the stock even more. So I don't know. This is something that I talked about, in a recent email, that I still feel strongly about Tesla. And I do. Look, despite some of the issues that we saw, a miss in gross profit margin, the expectation there, I think, was over 18. It was below 18%. And it feels as if Tesla's creeping closer and closer to profit margins that are in line with a GM or Ford. And that's kind of alarming, I would say. But the fact of the matter is that Tesla's still growing at around 40% year over year. And so is this valuation justified now it's at 78 times next year's earnings? It's really hard to say that it is. Yes, they're growing, but when you see the profit margins at what they are, and you have a Ford that's trading at 4 times next year's earnings, GM's trading at like 7 times next year's earnings, and then you have Tesla at 75. I mean, my God, it's not that I don't like Tesla. And I know it kind of sounds like that, but it maybe it just needs this breather. We have this zone here, down here at around 214. Could end up seeing lower than that. I would not rule out a $200 mark. I would not rule out the top of this zone down here at the bottom is at 198. I would not rule that out. But as we know, Tesla bros can come in at any time. And I think that the Tesla bros will probably end up showing up at some point. So if you are a believer in Tesla, you want to invest in Tesla, I think that that's probably the move. However, you may see other opportunities in about, and once the dust settles, and I think the dust could settle around that $200 mark, 197 to 203, give or take. So that's kind of where I'm watching it based off of the zones that Don has laid out for us. Don says 195. So I'm close. Don and I are close to being aligned on that. I said 200. So 195 is what's up, Don. Feel free to hop on if you're free. I don't know what you're up to, but would love to have you hang out. So that's what happened between Netflix and Tesla yesterday. I just kind of wanted to recap that a little bit, since today is going to be a little bit slow in as far as earnings are concerned. Now, next week, it's going to be huge, and I can't wait. I'm going to be live every day next week. We're going to be covering all of the big tech stocks, Apple, Facebook, well, Meta, Amazon, all the big tech. Microsoft is going to be popping off as well. So make sure you guys are hitting that like button, hit that notification bell to get notified when I do go live at 3:45 p.m. Eastern time. And yeah. So for those of you who are wondering why I'm even back in the first place, first of all, I missed you all. Hello. Sounds good, Don. Sounds good. Would love to have you back on. But Don and I are starting a new company with a new crew, and I'm really excited and pumped for what's to come. Some of you might have gotten email from TradeStream here over the last several days. That's the company. And I'm pretty pumped for what we have in store moving forward in that with our new entity. So super pumped for that. Stick around, because I think we're only getting started into something that's going to be really big for us. So it's going to be good. It's going to be good. Getting to some questions here. Snooker talked about car companies and car parts. With kind of like talking about the UAW and all of that, UAW strike. So let's take a look at that. Is there value to be had in something like a AutoZone, for example? Let's take a look at AutoZone. AZO is going to be your ticker symbol there. Really fell off today, down around 5%. Did it just fall off with the rest of the market? It looks like it did. Towards the second half of the day, just kind of fell off. So down another 5% today. Trading closed the day at $2,494. There's your daily chart. You're swinging this. You're still sitting pretty. 5% down, not great, but it's still done pretty well, all things considered. Let's take a look at this a little bit closer from a fundamental standpoint. Yeah, year to date, stocks up 3%, but over the last 6 months, let's see. Wow, it's surprising. It's actually down over the last 6 months, 6%. Not outperforming the S&P right now, but there are, and it's actually kind of expensive. Snookeroo. Maybe there's some more room for this to fall down. I haven't looked at AutoZone in a while, but I would say, this trend doesn't look, this is from last October. Let's draw a trend line from last October. So a year ago, right? From here. Certainly looks like it's moved more than 3% or 9% in the last year, but nevertheless, it looks like it's on a decent trend. Now, if we continue to follow this trend, I would say that, there's probably a little bit more room for this to fall down to. I mean, close at 24.94, maybe 24.50, somewhere around there. Could be a spot. We have earnings coming up on this later in a couple weeks, looks like. I would be cautious, I think, at this point. If I was looking to get into a new position of something, I don't know if it would be AutoZone. O'Reilly, is it the same here? I mean, I get the sentiment. Has O'Reilly outperformed? Let's just look at this to double check. Looks like O'Reilly has outperformed. It's up 22%. Yeah, it's up 7% on the year. So it's still not like and this is even it's trading. Yeah, it's even more expensive, trading at 24 times next year's earnings. And then AAP also, this one's interesting. All right, so out of the three, this one has me intrigued, but why is it down so far? Let's take a closer look. Clearly something that appears oversold, but sometimes there's good reason why it's sold off so much. Looks like over the last several quarters, it's not been great. So let's see. Let's see what we got here. It's trading at 11 times next year's earnings. So cheap for sure. 10% short interest. That's interesting. Profitability is gross profit margins at 43. EBITDA is at 7.7. So not fantastic, but not terrible either. The growth here is what's probably killing the stock. So revenue growth forward is only at 1.5%. Revenue growth, gross revenue growth year over year is at 1.5%. So the growth here is absolutely what's killing the stock. So we're going to have to wait and see when their next earnings come around to get kind of a better outlook. They don't have earnings again until November 24th, thereabouts. And so we're going to have to just see how Advanced Auto Parts is doing from a growth perspective. I mean, when you compare it to something like O'Reilly's that's growing, let's see, let's just take a gander here. Yeah, O'Reilly's is growing at 10, almost 11% year over year. Much better than at Advanced Auto Parts. If we go and look at AutoZone, their growth is at 7.5%. So not as good as O'Reilly's, but still way better than what we're seeing from Advanced Auto Parts. So I probably would stay away from this area altogether until sentiment turns around and we start to see some earnings that actually are positive here. But man, I don't know how I would feel about getting into that area. I probably would be probably just wait to see what sentiment was. Lord Fenrir says, I have a question. Why do you care about year to date? Asking for an imaginary friend. I mean, I don't know. Just like to see how it's outperforming, see how it's performing against the S&P. That's why I usually talk about the year to date performance, because are we looking at stuff that is actually beating the market? Year to date, the S&P is up 12% as of today. And so are we investing things that are actually outperforming that? Because if we're not, what are we doing? Might as well just buy the SPY and be done with it. So that's why. Here we go. Next one is Jeff Chow. Shit legit. He's bringing back shit legit. I love it. Lockheed Martin. They just had earnings this past week. Sitting here trading at 16 times next year's earnings. Just for Lord Fenrir, I'll let him know that it's down on the year. Oh, excuse me. God damn. It's down on the year 6%. Listen, sometimes the belches, they just come out of nowhere. So it's down 6% on the year, obviously underperforming. But could that present us with a opportunity. Now, if we take a look at earnings and how they performed, I believe they beat earnings. Shocker. There's more demand for missiles. They came in $6.77. They beat by 15. Revenue came in at 16.8 billion and beat that by 160. Their outlook: net sales of 66 to 66.25 to 66.75 versus, and they beat that estimate by about $100 million or so, a little over $100 million, and expected earnings per share at around $27 for the year, which is a beat as well. Increased repurchase authority by $6 billion, a total of authorization of $13 billion buyback. Good God Almighty. So we take a look at LMT. Obviously had a huge run up from their earnings, was up another 0.5% today. Moved up out of the zone here. Look, with everything else that's going on, and I talked about this on Monday too, with everything else that's going on geopolitically, how can you not like a Lockheed Martin? How can you not like a Raytheon? They're outperforming. Raytheon actually looks interesting here. Where's Raytheon valued at? Could we go after a Raytheon over a Lockheed Martin? It's cheaper at 14 times. Let's look at growth here. Growth is growing at 18%, 8%. Sorry, 18 would be fantastic. Lockheed is 4.5. EBITDA growth year over year is at 18.75. That's the difference maker there. What if we went after like a General Dynamics? GD is the ticker symbol there. What's the growth on that? 6.6 and a third. So, and let's look at GDs. I'm just going to keep saying GD because it just reminds me of God damn it. Oh, look at this. Don zone strike again. On the daily chart, you can see that Don had drawn out this zone here at around 244, came up to that resistance and got smacked. Might not be the buy there for General Dynamics. Let's go back to Lockheed and see where we're at here. I think I kind of like Lockheed here over all the other ones, but Raytheon's definitely got me intrigued. Raytheon looks like a decent buy here. Like if you're looking to take on a little bit more risk, I would say Raytheon probably should be on your radar too. Just my opinion, but that's what I would go after as well. Best stock to purchase today as a newbie. That is a good question. Let's take a look at one that I always tell people to go after, and it's Apple. Apple is actually starting to look like it's in a decent area. Don looks like he actually made a trade on this. I'm sure that he can talk about this in more detail. I'm not going to speak for Don, but it looks like he made a trade on this one on Apple. Now, this is a shorter term trade, but look, there's no better stock out there, in my opinion, than Apple or Microsoft. So whether you're a blue bubble or a green bubble, that's what I would go after first. If you're a newbie, don't know shit about fuck when it comes to trading stocks, I would go after Apple or Microsoft. So there you have it on that. TLT. Yeah, the treasuries, goddamn. TLT, I think that they're peaking out. I think TLT is going to peak out. Oops, not LT. TLT. There we go. Come on. They're getting smacked here. I think interest rates are peaking out. I would probably go, yeah. I would say that they're peaking out at this point. And I've talked about that a little bit earlier in the week. And we talked about AAP. Yeah, they got hurt. They've been getting hurt multiple earnings in a row. I'd go with Raytheon, says Lord Fenrir. Yeah, see, let's just go back to Raytheon real quick. That's kind of why, like, I took a second look at it because popped up out of this zone, as you can see, around 73.89. Let's look at this a little bit. Popped up out of this zone. I mean, technically, it looks pretty darn good. You can see how it was reacting to, things going on around the world. Monday, October 9th. Anybody recall what happened October 7th? Not a coincidence here, right? So I think that Raytheon could continue to move up. But yeah, I think that if there was Lockheed Martin's going to be something that probably going to continue to do well. Raytheon's also going to do well. I probably would stay away from General Dynamics, at least for now, until they start outperforming the other two. But I don't disagree with you, Lord Fenrir. Honestly, I don't know if you can go wrong with either one of them. Josh Schuler earnings barely moved the stock. Well, because I think a lot of that was already baked in. Lockheed Martin been blowing up. Yeah, no kidding. Raytheon makes the Iron Dome. Lockheed Martin makes F-16s. Another reason why I don't know if you could go wrong with either one of those. Don't disagree with this either. Don says Lockheed Martin and Raytheon are basically the same play. Lord Fenrir is going to whole account AMC. Guaranteed win for a newbie. Best today, CrowdStrike. Oh, yeah. Let's take a look at CrowdStrike here real quick. The cybersecurity stocks just continue to even though these are good companies that haven't always been great stocks, but CrowdStrike has been an absolute monster. Absolute monster. And you can see kind of had similar moves that kind of coincide, and I don't want to say that they're related, coincide with some of the defense stuff that's been moving around too. But CrowdStrike is on fire, man. Mike Hudson, always big into the cybersecurity stuff. He works in that area, so no surprise to see him hanging out with CrowdStrike. Man, it has been an absolute monster. At Palo Alto as well, doing pretty good. Really, I mean, we've talked about this. Should in the past probably should just create a legitimate cybersecurity ETF. I feel like some of the other ones out there are just kind of garbage. But man, if there was just an ETF that had 5 stocks in it, it would be like Okta, Palo Alto, CrowdStrike, Zscaler, a couple other ones. But man, this has been, and we've talked about this, about how lofty the valuations are on something like CrowdStrike, where CrowdStrike right now is trading at 66 times next year's earnings. But when you consider the growth here that they're taking, I mean, it is consistently 45, 50%. Yeah. EBITDA growth right now forward is projected at 60% growth. And then you look at profitability, again, 74% gross profit margin. So even though, this year has been a good year, but last years past, it's been last year was really rough for cybersecurity in general. Last 18 months before getting into around October of 22, but year to date, CrowdStrike's up 80%. I mean, what an absolute monster. Josh Schuler says TLT is the new mother. Yeah. So TLT, I would agree. I'm not saying mother of all short squeezes, but there's definitely a short squeeze in there for sure. For sure. This has been good. Let me know what you guys think, just in general. How we feeling? I want to try to re-energize, obviously, the show for sure. Just looking back into the poll, a lot of you guys think we're fucked next week. Shock City Rockers still long and strong on Palantir. Oh my goodness. we can take a look at Palantir if you want. I mean, last 6 months have been great for Palantir. Can't be mad at that. It looks like it is about to approach a potential support area. The top of the zone around $17. Looks like 1664. Keep an eye on that area, but look, I don't hate Palantir. It's still overvalued, and I don't like the dilutive properties that I've seen from Palantir for quite some time now. But you can't deny that it's been going bananas. It's up 75 times next year's earnings. Obviously very expensive growth here. I don't think the growth justifies that type of valuation. It's growing. Revenue growth forward is at 19.5. Profitability is bananas from a gross profit margin, but EBITDA's at a loss. So I just don't know if I could justify 75 times next year's earnings based off of that. But hey, what do I know? Any earnings movers to get revenge on, says Go Viral. Not today. Today's been a slow earnings day. So I was just taking an opportunity to kind of check in with you guys, see how you're doing. And I wanted to talk a little bit about next week's earnings, some things to keep an eye on. If you guys didn't catch the email that I put out yesterday, this afternoon, talked a little bit about Amazon and Meta. So let's take a look at those real quick. Amazon's been kind of going through it, but along with a lot of the other tech stocks since July, most of the market's kind of been on this correction. Amazon could potentially have a decent move up. And I think that if we come back and retest the top of the zone at around 125, holds that area, we could see a move up, especially if they end up having good earnings. Their expected earnings per share on the 26th, which is next week, 60 cents per share, $141.6 billion. Lots of upward revisions on this one. Last time around, they came in and beat. I think that Amazon's finally turned that corner on cutting costs, getting through some of the legal bullshit that they've had to go through. I think it's time to take a look at Amazon yet again. It's expensive. Make no mistake about it. But everything else about them is just good. I think despite some of the economic concerns and what they've been going on with legally, this looks like a good spot. I'll get into more detail on that as we get into next week, but just kind of wanted to put that on your radar. Meta has been something that Don from the Don Franz Show and I have had hard-ons for since October of last year, and all it has done is gone crazy, 150% since January 1. That's how much has moved. So Don and I crushed this pick. Let's take a look at the chart here real quick. And yeah, I mean, it is looking pretty good here. Their earnings next week expected to come in at $3.60, $33.44 billion, and tons of upward revisions on this as well. Lots to like on Meta. And here's the thing, even though it's up 150%, valuation has stayed pretty steady at 23 times next year's earnings. Now you compare that to any of the other FANG stocks, and it's still on the cheap side. Even if you compare that to something like Microsoft, for example, Microsoft's trading at 29 times next year's earnings. Apple, I think, is over that. Oh, come on. Dumbass computer. I lied. I love this computer. Apple's trading at 28 times next year's earnings. I think the only other cheap one in this sector, or in the FANGs, I should say, is and Google's even a little bit more expensive. Not by much, 24.67. It's almost 25 times next year's earnings. So of the Fangs, despite this ridiculous move that Menace had, it's still cheap. Don. Oh God, I missed you guys. Mike says, hit me up on Discord, Don Fran. He has some questions for you. Probably has to do with a handful of stocks that he wants to get year-to-date performance on. Just a hunch. If I had to take a guess, it's probably what it's about. Don't tell me I'm wrong, Mike. All right. All right. That's gonna do it for today's show. Listen, I wanted to kind of keep it light. I wanted to keep it short and sweet. Because next week it's just gonna be a lot, and the week after is going to be a lot. We're going to get really into the meat and potatoes of earnings, and so I just kind of wanted to take a little breather and let you guys know what's going on and how we're going to be revamping some things. Tammy asked you about a good entry. I would say on Meta, I would say watch for 310 to see if it holds that area, 311. See if it holds that support. If it does, I think that's going to be a reasonable spot to keep an eye on. Mike, I told you not to correct me, bro. God damn it, man. You couldn't just play along. All right. I love you guys. I'll see you all next week. Monday, we'll be going over earnings again, and we're just going to, like I said, we're going to get into the thick of it. Big Tech is going to be reporting next week, so it's going to be a lot of fun to watch. All the big ones we'll react to. I believe Starbucks is going to be in there, a couple other ones. So looking forward to that. You guys are amazing. If you want to talk sports, make sure you go check me out over at the Ryan Ripken Show as well. We'll be live tonight at 7 p.m. If you guys haven't checked out the Ryan Ripken Show, I am doing that as well. I'll share that link with y'all. Here it is. We're going to be talking all kinds of stuff. Football, baseball, you name it. So lots of stuff going on. There's the link. If you guys want to go follow along, go subscribe to the channel. We'd love to have you guys over there. Other than that, have a safe night. Have a safe weekend. And I'll see you Monday. Well, you guys have been fantastic. Most of you guys that have been supporting me for too long. But I appreciate it anyway. You guys are the best. I'll see you Monday. And have a great weekend. See ya.